BBVA Greenfluencers, a BBVA podcast.
Investing to protect and create value. Episode 24. In this episode, we meet with Emmanuel Lagarrigue, partner and global co-head of climate at KKR at their New York headquarters. Antonio Bravo, global head of data at BBVA, speaks with Emmanuel to learn how this leading global investment firm combines capital, the support to key technologies in the energy transition, and financing to accelerate the development of sustainable and innovative solutions.
Welcome to BBVA Greenfluencers, the BBVA Corporate and Investment Banking initiative where we engage in dialogues with some of our partners and clients globally to talk about energy transition and everything that comes with this new technological transformation that we're facing. Today I'm thrilled to be at KKR headquarters here in New York with Emmanuel Lagarrigue, who is a partner at KKR and is one of the leaders within their energy transition efforts. Since September last year, where we announced our partnership, the both firms have been joining efforts to support some of the key technologies for energy transition, both on the equity and on the debt side globally. So thank you, Emmanuel, for hosting us today.
Thank you, Antonio. Thanks for being here, and thank you very much for your partnership.
Thanks a lot. So, Emmanuel, we know that we are in the middle of a very large CapEx cycle in a context where energy is becoming more scarce. And that applies, of course, to the US, but then also Europe. And it's a global trend. And in that context, you guys at KKR are pulling together a very ambitious strategy to actually tackle on the opportunity. That is a very attractive opportunity for investors. And then also, as I mentioned before, for banks to be financed. So why don't you walk us a little bit through your climate strategy and the type of opportunities that you guys are envisioning?
Yeah, so if you look at the amount of money that has been, the amount of capital that has been invested in climate or in decarbonization solutions over the years, there is basically two pools of capital. One pool of mostly around renewables, I would say classical energy transition, well-known entity in which you're very strong, you've been historically a strong player, and where we have been historically very strong at KKR, as you mentioned, more than 20 billion deployed in, I would say, the classical energy transition. And then you have climate tech, which is all the early stage investing in all the technologies that you need, not only to decarbonize energy, but also transportation, industry, agriculture, and real estate and buildings. And this is, I think, what we are seeing together is that when you go beyond climate tech, when venture capital and growth equity cannot follow anymore, where it's not logical to continue applying a venture capital approach, but where it's still too early for, I would say, core infrastructure, there is a sleeve here where we as infrastructure investors and you as a debt provider, we can really build something unique. Because this is usually the moment when things become very capital intensive with a lot of growth and a lot of new opportunities, which eventually tomorrow will be part of the core infrastructure remit of many funds. Totally.
And you referred to part of this, but there's a couple of intersections that are very clearly to be managed, which one is energy security and the other one is energy affordability. How do those two fit within the investment strategy that you guys are managing?
Yeah, energy security, affordability, energy abundance is going to be a key theme in the energy transition, of course, on top of decarbonization. And you see that coming when it comes to mobility, for instance, which is a big sector in which we are working on together a lot. Or I would say the next wave of storage on the grid to solve for the intermittency of renewables. Electrification of heat. So all this corresponds, you have a strong underlying trend of direct or indirect electrification, which at the end, it means efficiency, less energy, lower cost, where you can bring a lot of efficiency to the systems, to the industrial systems and the supply chains, and therefore create superior returns for equity investors and for debt suppliers.
Totally, and also consumers, right? Because at the end of the day, either if it is a retail consumer or an enterprise consumer, I guess what we're seeing in many cases is that everything we've mentioned can be done in a way that solutions that are new to the market are also a good value proposition for the consumers, no? And in that sense, probably Tesla has been one of the clear examples on how new technology can provide innovation that is massively adopted by different type of consumers. And why don't you walk us through some examples within your existing portfolio of companies and businesses that are building on top of new technologies, solutions into the market that are interesting for the customers, not only because they are they actually have a good emissions profile, but also because they are cheaper and more efficient.
Exactly. So if you really want the system to work and to be investable and financeable, it has to be better, greener, cheaper, faster. I mean, in some sectors there is some tolerance for what we call green premiums, but those new technologies which are decarbonizing the economy cannot create inflation. So they have to be greener, but also cheaper, better, and faster, as we said. This is why. So, for instance, there's a sector around electrification of transportation that we are both working on a lot, which is the electrification of commercial vehicles. And how, when you transition a fleet of buses or delivery trucks from diesel to electric, you actually create an upside. Because it's simply cheaper to operate a fleet of electric vehicles, electric buses, than a fleet of diesel buses. You just have to organize the financing and the equity in a way that you can extract that superior total cost of ownership. So this is a good example. Electrification of heat, same thing. It's more efficient. Therefore, that efficiency should translate into superior returns. So heat pumps, transition of heat pumps in industrial systems or in multifamily residential. Energy storage. This is how you really make solar and wind competitive on the grid because you need baseload power, but you need baseload power at an affordable cost. And with the cost curve of batteries, this is where grid storage really becomes in the money. So those are all those topics which are, again, beyond, I would say, traditional renewables and are probably the next big capital-intensive stories in energy transition that we want to focus on together with you guys.
Totally. And I think we have already some strong examples and some more coming in the pipeline, again, of technologies that are investable today, can provide good returns, and also can be a good solution for the clients because they will provide down the road clearly savings and efficiency, no? So one additional question, Emmanuel, regarding so we've talked about some of the technologies that we're seeing out there becoming more financeable and bankable and investable. What are the flavors by region? Because typically it's been like that in the past. Some solutions will have a better fit in one region than another. How do you see, from that lens's perspective, some of the technologies that we've been talking about?
And that's a very important question because the starting point is the cost of energy and the energy mix of every region, right? So here in the US, energy is cheap. Compared to Europe. So the starting point of how you're going to manage the transition, how you're going to transition fleets of electric vehicles, how you're going to transition to renewables, what's the business case for batteries, that's going to be very different in the US than in Europe or in Asia. So that factor number one, and sometimes people miss the point, right? So they say, oh, Europe and the US are just the same thing. No, the starting point is extremely different in terms of energy mix, type of energy, especially now that the US is the largest producer of oil and gas and probably the largest producer behind China of solar power. So that energy mix is a very important starting point where you have to calibrate a lot of these investments. The second thing, of course, is policies, and then policies in Asia, in Europe, and in the US are different. They are adjusting, but this is also part of the landscape, and you don't want to find yourself taking any type of regulatory risk and jumping too fast on things which inevitably governments either cannot afford or will change their mind on in the next election. So This is a landscape that is dynamic because we're all learning. This is a process. But if you come with all those things with your eyes wide open, usually you find very interesting opportunities to invest in.
So thank you, Emmanuel, once again, and please have here the gift as BBVA Greenfluencers. Thanks to you and to KKR for your partnership.
Thank you, Antonio. Thank you very much for your partnership. For me, it's a great honor to get this award, and it's humbling and just the beginning of a very long and fruitful partnership between our two firms.
Indeed. Thank you very much.
For more contents, follow us on LinkedIn, write BBVA Corporate and Investment Banking, and visit our website www.bbvaciv.com.